Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to be talking about Bitcoin, apparently. I got a couple of requests to break down Bitcoin from my own point of view. I will certainly do that. We've also got a huge news cycle going. Trump just gave a news conference that it's pretty crazy. I mean, some of the concepts that are being covered today are way out there. We've got Justin Trudeau actually formalizing his departure from the Canadian government, and we've also got some key figures out of the EU. We're going to look at the Euro USD, the Euro Great Britain Pound. We're going to look at a lot of strategies today. We've got a pendulum trade that I need to show you. If you don't know what the pendulum is, be sure to check out howtotrade.com. Check out our academy. Click on one of those videos. It's called the pendulum. It's about 6 minutes long. We'll get you up and running with a nice price action strategy that has absolutely nothing to do with indicators. So we're definitely going to be doing that. We've also got a crossover play and a 920 crossover on the DXY that we got to show you, because this is something that if you do in fact trade something like the 920 EMA crossover and you time the market right and you get in and let your trades run, you can make a lot of money doing it. I'm going to show you a prime example of a 920 trade that really it called the rally that we've seen in the DXY. Right now, the dollar index is up at about 108.50. I mean, that's absolutely huge. That's a huge valuation. Wrote about it earlier today on our trade idea. So I want to go ahead and get started. We got a lot to cover here. We'll be sure to do anything you guys would like. If whatever market, just go ahead and plug into the live chat via YouTube out there in YouTube land or Twitch or on X. Whatever you need to do, just go ahead and do it. I'll be sure to cover as many markets as I can. Also got a few things that we need to talk about because they're the movers and the shakers, and a couple of things that I think we have an ability perhaps to cash on today or cash in on this week. All right, guys, remember, if you got a trade, head on over to our partner broker, Switch Markets, services most international municipalities here in the United States. If you're not going to be able to open a Switch Markets account, go over, check out Awanda. That's our partner broker here in the States. So it's Switch and Awanda. So be sure that if you want to trade, check out one of those out. So, okay, let's get right out to price action. This is a trade idea that I posted a little bit earlier today on the US dollar Japanese yen. As you can see, it's a buy. It's a pullback buy. And right now, we're starting to see a little bit of price action that might get us involved. I wanted to post this trade idea early in the week. And the reason why I wanted to do that was because we've got NFP this week. NFP Live is going to be a big deal. That's going to be our number one market mover all week long. Today, we're going to talk a little bit about EU CPI. We're also going to talk a little bit about the JOLTS job numbers, but we're not going to spend a whole lot of time on them because the number one market driver this week, aside from any crazy news events that nobody's ready for, is going to be Friday's NFP Live. I'll be here live, so be sure to pop on in, and we'll do some live trading and see if we can't bag a few ticks. That's sort of what we like to do around those key releases. Analyze, trade, give you a good outlook for the day to come. All right, so right here is going to be the dollar yen pullback buy. Just very simple. What I do with Fibonacci's right there, bang, spike low, a nice weekly spike low right down there, sort of at that trough in early December. And then what do you got? This sort of peak. This is a P formation, very bullish. Very, very bullish. I think right now with the DXY up above 108, you see we're printing about 157.63, somewhere in that area for the dollar yen. If we get that pullback this week from current highs, 154.68, I believe our entry point's somewhere around 79, and that is all located in our analytics thread on our trade idea. But I'm looking for a pullback here. I understand fully that we're about, 300 points or 300 pips off of this entry. This entry right here is fantastic. I'm watching this for NFP. As long as our current high holds, if we do push higher, then we'll just adjust our Fibonacci's this way and our entry will be adjusted. But I'll tell you right now that if in fact we do rotate off of our top right in this vicinity, and I believe that we will, if we do rotate down, we could have a great chance to buy a dip, maybe an unexpected dip, and we could get long the US dollar Japanese yen, which is a pretty good thing to do right now, I think. That's for sure. Lewis Shepard, good to see you, Lewis. Good evening, good morning, good day, wherever you may be. Any questions at all, be sure to fire away. I'll cover as many as I can. Mark Corp, good to see you. Bobby Bob, always a pleasure. All right, guys, the news cycle today has been absolutely huge. And one of the things that we always want to do is be aware of what's going on with our politics and also with our markets and our economic calendar. Today, EU CPI was a big one. JOLTS job openings was a big one, and those are key events. We got some requests for Bitcoin, so I'm going to go ahead and start with Bitcoin. Then I'm going to go ahead and get into our fundamentals of the day and go over that euro. But this is my look at Bitcoin. Realistically, weekly levels. Love my weekly levels. Absolutely love my weekly levels. Dibble, good to see you. Dibble, welcome. Love my weekly levels. And that level right there, we sort of called out this trade quite a while ago. 38%, 92.5-ish. We were looking probably at 93s, 92.750s. That's been an absolute banger. We're back up to 97. So the real question becomes this if you're trading Bitcoin. Right here. And of course, I've got the wrong color lineup. But what really matters is 100. Now, we've been trading 100 for a long time. We have. That's what I call a saturated key level. Huge psychological level. Is it support or is it resistance? As of right now, it's looking like resistance. You can see our weekly top today is right around 102.750, but we've retraced a little bit. So right now, we're off big. I would be looking to play that 92.5 level again. Now you're saying, Shane, that's $5,000 off. Yeah, it is, but life happens fast when you're trading crypto. Happens even faster when you're trading Bitcoin. Let me see, Sagir, good to see you. Gold, absolutely. We'll look at the gold markets as well. Hello, how you doing? Clive Harrison, always a pleasure. Yeah, well, I'll be more than happy to look at gold here in just a second after we go through some of our fundies. But right there for Bitcoin, I wouldn't go any further than that. Now, a lot of folks are going to want to trade it right now. If you want to go to a 4-hour chart, I can tell you, okay, listen, what's the deal with the 4-hour chart? Clearly, compression, break. All right, there's our support zone down here. I have no problem selling right now on a 4-hour chart. If, in fact, you're trading maybe a Bitcoin CFD or a Bitcoin futures contract, 98, 90, 97, somewhere in there, 98,970, maybe 99,000, pretty darn good selling location. I wouldn't be afraid to be short. I wouldn't be afraid to be short from up here, really, until down here. But to be honest with you, if you want to do this, patience is the key. And I'll tell you right now, that 38%, that's a pretty ripe area. Now, if that does get washed out, you don't want to be around to the long side because the market really could plummet underneath that key zone. So definitely take a look at that. One last thing I'll say about Bitcoin before we get to our fundies is we read a news story earlier this week, yesterday, and it was about the Trump administration pushing to acquire 500,000 Bitcoin for the United States Reserve. That's a major player. That could take Bitcoin very, very high. Very high. So definitely want to keep an eye on that news cycle. And I'm going to show you a couple more Trump stories that I couldn't really believe I've seen. And we knew there was going to be some change. We knew there was a new sheriff in town. Things are changing by the minute. Now, how much of this stuff comes to fruition, I just don't know. But what I do know is our Euro USD is definitely sort of working a 5-8-13 trade. So here's really the crux of what I like to do in the markets. Well, that's no good. Let's go ahead and get out to price action. The crux of what I like to do in the markets is very simple. I like to understand exactly where the profitable trades can be. And what I need is a technical structure and I need a fundamental backdrop. The fundamentals tell us when exactly the market's going to move. The technicals help us capitalize with good trade location and good risk management. So right here, this is a good look at a 5-8-13 EMA strategy on a daily Euro USD chart. Now, this is a big one. This is a big time frame because daily charts, typically you have big ranges. Now, sort of throw this in the rear view, we had sort of a buy signal back here in late November, and you could see your buy was going to be right up here. Remember, on the 5-8-13, the 5 crosses over the 8. Price has to be above all 3 of them. That's why the 13 is very, very important. It's our baseline. So even though we sort of cracked our top right there, that would have been our long. We retraced against us. Our stop loss probably would have been right beneath that swing low, something like that. We did get good positive price action, but eventually we just sort of got ground up and stopped out. We could have moved our stop. We could have done a lot of different things to minimize the damage because you did get a pretty good positive move. Right now, what I'm looking for is another crossover. So today, probably not going to get it today, but are we in oversold territory? This is tough because we touched that line, and you can see right there at 30, what was our low? Our low right there where my crosshairs are, 29.93. That barely went beneath that 30. If you wanted to buy the Euro USD, you can do it. You just got to wait. According to this strategy, RSI is in oversold territory. Beneath 30, we're looking to get long the market. What has to happen? The 5 has to cross the 8, and price has to be established above all 3 EMAs. It's as simple as that. I'm watching this chart closely as the week unfolds. I really am. Now, as far as our fundamentals here, I messed up the screen just a second ago, but right here you can see what happened in CPI today. Core CPI in the EU came in about flat. These are preliminary numbers. These are the ones that shake the markets. As far as your core CPI month over month, up dramatically from last month. So what does that typically mean? It means potentially that could be a weakening factor for the euro, the EUR. You could also see your CPI, 2.4%, that's up. And then also month over month for December is up big. So we saw a major increase in those inflation figures. That suggests that maybe the EU is not going to be quite as dovish as they would be otherwise. Watching very closely. Lewis 79, good to see you. So right now, what does all this mean? It means we're in an absolute logjam on the Forex. We don't really know what's going to happen with the euro. We don't really know what's going to happen with the dollar because right now our monetary policy is opaque. is absolutely opaque. So we've got to wait. We've got to wait for these numbers to develop. To be really honest with you, this CPI ticking higher, it sort of makes me believe that maybe those books were cooked back in November when we saw a big contraction in that CPI level in the EU. So definitely interesting stuff here. As far as what else could we be looking at for the euro? This is one of those that I love to really trade. I'm a big fan of the pendulum strategy. I love trading rotational markets, flat markets, and the reason why is because my risk is small and my rewards are pretty darn good. Pretty darn good. So it's not that you can't trade flat markets. The number one thing you're going to hear on the internet from every other person out there, or people that think they're gurus and all these millionaire traders, is you got to be on when it's volatile and it's moving. We're making a video right now on opening range breakouts. That's going to be out in about 2 weeks. It's going to show you how to trade the opening range of the U.S. session. It's all about getting in on a move. Well, later in the day or during lunchtime in the U.S. session, and you see this a lot in the afternoons and also really throughout the trading day until that London Open, Tokyo Opens, those can be active. But when the market flattens out and it becomes sort of the doldrums, you have a great chance to trade flat markets. This is what we call a reversion to the mean strategy. It's called the pendulum. It's in our trading room. Go ahead, check out our trading academy. Give the pendulum a click. You're going to have about 6-minute watch, PDFs, the whole 9 yards. In any case, the whole premise of the pendulum is pure price action. You're going to find a support level and a resistance level. You're going to go ahead and determine this range, and your entry points are very simple. You're going to go ahead and wait for a test of resistance and a 10% pullback, and then you're going to sell. First profit target's a midpoint. Second profit target's 90%. On a buy, you're going to wait for a test of support, a 10% bounce, and then you're going to buy. First profit target's at 50% of the range. Second's at 90. Now, all that's fine and dandy. It really is. It's great. It's easy to do. For me, I'm looking at the Great Britain pound or the Euro Great Britain pound because this is a rotational pair. This pair doesn't go anywhere. It just doesn't. It's flat. So if in fact we got a market that is really prone towards consolidation, I can open up my throttle a little bit to a daily chart. I don't have to trade this on a 30-minute or a 5-minute or 4-hour. Typically, we target 4-hour charts for this trade. You could execute on a daily. And the reason why is because the range isn't that big. I mean, this is a manageable range right here. So you got 83.25 to the top, and you've got 82.62 to the bottom. That's nothing. What are we looking at? 60 pips? This we can develop into a nice, about 25 pip trade, either selling from about 83.19 or buying from 82.69, with our profit target being at about 82.94. Now, where would our stop loss be? 1-to-1 ratio, midpoint to your entry, which in this case is 19.94.6, 25 pips. 25 plus 83.19 is what? 46. I was told there would be no math. Somewhere right up in there. And of course, my lines are the wrong color, but there you go. So that would be your stop loss. There's your trade. The biggest trick to executing a pendulum correctly is waiting. Wait for that test of resistance. Okay? Wait for this bounce back. You can go within a pip or two. Remember, I would say that if the price breaks 5 or 10 pips above this, I wouldn't take it. I'd say 5 would be my max. I wouldn't take it if the trade broke and then retraced. The idea is you don't want to get in on that breakout. You don't want to be the wrong way. Wait. About 5 pips would be my max here. And then if we do get that retracement, then we're going to be short. Conversely, if we take a sell-off down here, your entry's right there. You're going to wait 5 pips, 5 pip test of that zone, and then you're going to go ahead and you're going to look to get long with your profit target in the middle, and your stop loss is at 25 at 1-to-1, 25 pips from there. Relatively simple trade. I'm watching this one closely. I think we've got just enough movement here to make a little money. I love my daily chart. I think those support and resistance levels are pretty darn good, and it's all price action. Now, we just drew some hieroglyphics there. That's an art form. Look at those hyros. Yeah, maybe I should have been an archaeologist or something like that. That may have been more fun than sitting in front of these screens, but maybe not. All right, let me see. Brian Barbie, thoughts on the CAD with Trudeau stepping down? Absolutely. We're going to cover all that in just a second. I want to talk JOLT jobs, and then I want to hit that gold market up real quick. I think we've got an opportunity there potentially to trade the gold. So JOLT's job openings. Now, remember, this is CPI week. You're going to want to be able to drop in, save the date Friday at about 6:20 my time, about 8:20 a.m. Eastern time, 10 minutes before that non-farm payrolls drops. Drop in. We'll cover all the stats you need to know. We'll also cover expectations, analytics, and then we'll set up our markets and see if we can do some scalping, high-impact scalping on, say, a 1 and a 5, and probably a top out at a 5-minute chart. We'll trade some Fibonacci's. We'll also line up a crossover strategy and see if we can cash in on a few ticks. I always love to do that live. It's always a lot of fun to do that with all the other traders watching. So, all right, JOLTS job openings. Today, it's not a big deal. I read a lot of stuff online from some analysts. I'm very skeptical. I like certain people. I don't like others. I like anybody that shows up and tries hard and doesn't believe they know everything. And we listen on CNBC and Bloomberg and all these different news outlets. People believe they know everything, and they talk a lot. Well, that's fine and dandy, but JOLTS job openings today was not a market mover. And I saw from 5 or 6 different blowhards that, oh, this is a preview of the NFP number. And I go, no, it's not. But it is important to look at because it does sort of play into the narrative that, yeah, the jobs market is very, very important right now. Everybody's looking at it. They just don't particularly care about JOLTS job openings. Unless you're an economist or something like that, then that's how you make your living. In any case, what is the JOLTS job openings? It's a survey done by the U.S. Bureau of Labor Statistics to help measure job vacancies. That's it. So instead of new jobs created like non-farm payrolls, JOLTS jobs are openings. That means how many openings are out there. Theoretically, the more openings there are, is that the sign of a strong job market? Potentially, could be. Or is it the sign of a weak one? Typically, contracting job openings mean that we're going through an economic contraction. Typically, that's what it means. You could also interpret that to say, hey, people aren't leaving their jobs. They're digging in. Either way, it's a sign of economic contraction when these JOLTS job openings come in lower than expected. To me, I don't put much stock in them, but we're going to look at them anyway, at least real quickly. What I would say is sort of take this stuff with a grain of salt, but trends are important. It's important to understand exactly what's going on with a lot of these metrics, and this is a 3-star event. It's something that a lot of people are looking at. So for November, 8.09 million openings. That was well above what was expected, 7.730, and up from the previous release. Number of job openings increased 259 to 8 from an upwardly revised 7.8 million in October and above expectations. There you go. Jobs increased in professional and business services by 273,000, finance insurance by 105,000. So the idea is that we're growing. The economy's growing. That means that the Fed can maybe hold their interest rates higher for longer, and maybe there's not as much downward pressure on them to avoid a recession. And this is a good look at JOLTS jobs over about the last year. You can see we were very robust last year at this time, and then life got relatively tough, especially in September when we saw that dreadful NFP number, and then we got that 0.5 point rate cut. And the Fed right now would say, well, that rate cut's really done the trick. We're going in the right direction, and the economy is growing. Don't be surprised if you hear Jay Powell talk about job openings at the Fed meeting later this week. You're definitely going to want to stay tuned for that. So what does all that mean? Well, I mean, it means a lot. It means a lot to economists. It means a lot to probably Jay Powell and the Fed. They're trying to figure out if we're going into an economic contraction or not. And the idea there is they've either got to cut rates or hold them where they're at. That figure suggests that they're going to hold rates higher for longer. That's what we saw out of the huge NFP number in December. We're getting ready for NFP for January, or for December later this week. They always release it 1 week, one month post haste. So January's figures are going to actually be from December. I think you're going to see another strong figure. I think that the books could be cooked, and I'll talk more about that as we get closer to the big day. But this right here is interesting to me. Gold. What did this do to gold? Not much. You can see right now we're up. We're up about 0.5% for the month, though. That really is the big level that we want, the 2480 bid. And we also put a trade ID out yesterday. This sort of was an inside month breakout. I want to see that breakout develop. Now, as far as intraday trading goes, we can look at our dailies first. As far as what this is. Very tight. It's very tight. I mean, it's very tight. There's our Bollinger Bands, real tight Bollinger Bands. We sort of broke above yesterday, sort of a doji there. It's not really a hammer. It's a doji right at my Bollinger midpoint and moving average. Today, we've seen a bit of a bullish play. Am I dovish or hawkish? Am I bullish or bearish? I don't think I would touch this market until we see a move. Now, if you want to intraday trade it, of course, we're up about 0.6%. And you see right there was your move. So, right there was your JOLTS job openings, bang, bang. And then you saw a big sell-off in the subsequent hour and a half or so. And now we're just sort of rotating around the middle. This is really hard. This is really hard because, in one respect, we could put Fibonacci's up here and I could give you a way to trade it. In the other respect, if you're interested in trading gold today, later today, and the market's very, very slow right now, I would highlight that U.S. session, this move right here from about 6:30, maybe our JOLTS jobs numbers, and we came off in a big way. Right there was sort of the half hour after the opening bell. This would have been your opening hour range. We're going to put a video out on that. And then we sort of just rotated right in the dead center of our range. So how do we trade this? I wouldn't be long and I wouldn't be short. I wouldn't be interested in any of it. In my opinion, let me see right here if I can get my highlighter up. I would be probably bidding down here towards the end of this range right here, and I would be selling up here. And my profit targets would be small. I would be very conservative with what I tried to get out of gold today. The market's dead. You're trading right in the 50% range of the 50% mark of today's range. I wouldn't fall in love with the long or the short side. Guys, we're coming off a tight December, a tight inside month, and we're looking to open up the throttle. We're going to have to see gold trade above December's high or below December's low. We were looking towards beneath December's low. That was the trade idea for Monday. Perhaps tomorrow I'll put out, if we get a little more pressure to the top side, I'll put out perhaps bidding above last month's high, which I think could really break high, but I don't see the market drivers there. I see more bearish market drivers for gold than bullish ones. Right now, if you ask me to pick a side of gold, I'd probably be bearish, but I don't want to sell. You can't sell because the market's too tight. Odds are you're going to get chewed up. If you're day trading today, you want to see this thing move. That's the number one thing you want. You want to see the market move. You could probably get away with selling up here, selling the upper extreme, and then buying the lower extreme. Just keep your risk sort of a little bit conservative. If the market breaks, you got to get out. But remember, if you're looking for a profit target, a big one, this probably isn't the thing to trade today. You definitely want to keep your profit target conservative. You may be able to scam a few pips off the top, maybe a few pips off the bottom of this range. Something to think about. All right, let me see. Brian Barbie, thoughts on the CAD? Yeah, absolutely. Let's go right out to the CAD here. Moses, good to see you, Moses. Welcome back, guys. All right, let's get right out to the big story, and this is a big one. I mean, this is Trudeau, not exactly the most popular folks in the most popular guy in Canada. I don't live too far from Canada. It's just up I-15, not too far from here probably. I don't know. It's probably a good 5 or 6 hour ride to get up into Canada from Dillon, Montana. But what I would say, excuse me, Trudeau is not popular. He hasn't been popular. The Canadians that I've talked to, the folks that live up there, have wanted to get rid of Trudeau for a long time. And the other shoe's dropped. There's a lot that's happened since yesterday's certification here in the United States. Trump, it looks, he's going to be the president here. There wasn't any shenanigans. No, there was nobody calling on the 14th Amendment. There was nobody trying to stall the process. There was no terrorism, which was surprising, but a great thing. That's fantastic. So right now you're starting to see the dominoes fall. A lot of folks believe Keir Starmer's in trouble. Overseas, most of us think that's going to fall. Most of us think Macron's probably going down this year in France. So the dominoes are now falling. Trudeau looks to be the first one out. Not a popular person. And you can see right here, Trudeau went ahead and got out in front of probably what was going to be a vote of unconfidence or no confidence in Canada from the Canadian Parliament, and he's gone ahead and resigned and stepped down. So what does that mean for the Canadian dollar? Well, read the headline right there. This is Bloomberg. Canada tilts right. Inflation claims Trudeau is its latest victim. There you have it. Inflation. So if inflation is a major problem, and the United States dollar doesn't look like we're going to get the rate cuts that we're going to get or what we were promised back in September, what's likely to happen in Canada? Right now, crude oil's up. I mean, we're looking at WTI crude right around $75, $74.38. That's a robust reading for January. There's no two ways about that. That's going to be strong for the Canadian dollar. Also, that inflationary narrative. Will the Bank of Canada cut rates or hold them firm for a while? We don't know. Nobody knows. This week, though, hard to argue that Trudeau's stepping down wasn't a bullish market driver for the Canadian dollar. You had crude oil up, you had Trudeau out. So take a look right there. There you go. So why would that be sort of a bearish market driver for the Canadian dollar? There's been tariff threats. Nobody really knows what's going to happen with the next PM up there. If you, in fact, do get a trade agreement, something that's sort of agreeable to both sides, which is all going to revolve around fossil fuels, what would that do to the Canadian dollar in the long term? I really don't know. I know what the traders thought it was doing right now, and that was really a bearish look. We posted this one on X yesterday, and this was 142.59-ish. I was really looking at that as being a robust opportunity to bid. And you can see we didn't quite get down there. Our low was about 142.78. So we were in the ballpark, but we didn't quite get that one. Let's go ahead and take a look at the daily price action. And you can see there was your sell-off. We were right there. We just didn't quite get it. And there's your bounce. So if you're looking at this on a daily, it's relatively easy to see where the value area is. That's what we would call a rectangle. This area right in here would be a rectangle. There was an instructional video on that somewhere we made a year or so ago. It was something like this. So the idea was, okay, in a rectangle, you're either going to get a breakout or you're going to get complete rotation. You can see we sort of zigzag, bang, 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 bang. Then we got our break, but we couldn't really hold our water beneath that zone. So what do we do now? Well, price is rotating back up into this value area. Do you want to buy or do you want to sell? Man, it's tough. It's really tough. I mean, in one respect, I can build a 4-hour chart. I know we can go to a 4-hour chart and potentially take a look at, a Bollinger W. That's another strategy. We'll cover these in depth down the line later this year. But, I mean, according to the W strategy that we talk a lot about, bang, there's your outside, there's your Bollinger Band. You can't see it very well, but it is there, and there's your second low. So there's your pullback, there's your second low right inside, and then what? There's your big green candle. So do you want to be long or short? I would probably err on the side of being long right now. So if I was going to trade the Canadian dollar, I would be looking to send them long. Let's go ahead and just pull up our demo trader and see what we can do. All right, let's go ahead and trade. What do we got on for an order? 500,000. Yeah, let's go ahead and put a position on. Let's go ahead and cut that position just a little bit though and make it a little more realistic. 250,000. Let's go ahead at market and send them long right here. Okay, you could do it. You can certainly do it. The biggest thing you'd want to remember is, number one, where's your profit target going to be? Sort of hard to see on this chart because of the color of it. Let's go ahead and shift this real quick. Go down to settings, and we'll go here. Background, we'll turn it black. There, and then let's go white with our letters. All right, so what do we have? We've got our lower Bollinger, which is a periodicity of 24. The strategy is 22. Let's get all the drawings off of there. Okay. Let's go ahead and add the indicator here. I'll show you what I mean. Let's go to Bollinger Bands right there. Add it. Leave the default setting. That's how let's see. Let's go right here. Let's adjust this to inputs. Personally, I like to use a 24. Let's go ahead and just put it on 20 and see what happens here. And you can see you're very much inside. So Bollinger W, remember, how do you execute? Big sell-off. There's the first bottoms outside of that lower Bollinger Band. Then you get a pullback, which we clearly did. Then we came right down for a second bottom, which is there inside of that Bollinger Band. You're looking for the first big green candle. Potentially you could have went long right there. I would have waited for it to prove it. That would have been your entry. So we're long right now. Where would our profit target be? Well, I mean, right now we're long from 143.45. I would go back to that rectangle we had. Maybe shoot for something up in here. You can shoot for the top of this market structure, which is only about 30 pips. You could probably shoot for the middle, 144, something like that. So if you had a 144, where would your stop loss be? I always put it a few pips beneath the bottom of the W. Theoretically, it should look like a W. So not exactly the prettiest W in the world. We can go ahead and do it like this if you want. A little bit better. Boom. Boom. Let's go ahead. Sort of a steep W. Right there would be a retracement. There. That's really nice right there. That's second low inside. And then lastly, you're going to be looking to get long. That's what you're looking to do. Bollinger W. That's another price action strategy. It's not price action. It's an indicator strategy that we have in the Trading Academy. So be sure to check that one out as well. All right, guys. Let me see. Mutebi. Yeah, we'll go ahead and we'll do one more. There's a couple news items that we got to look at, and then we'll go ahead and sign off. These headlines are unbelievable. There was a presser. Trump did a presser, I don't know, about an hour and a half ago. Some of the headlines. This headline dropped. There's talks of acquiring Greenland. I don't even know how you do that. I have no idea. I don't know if they buy it, if they enter it into a trade idea. I would be very surprised if this comes to fruition. But after you saw the not the ratification, but the certification of the U.S. election, these headlines start to drop. And this is really something. Theoretically, I guess you could do it. You could do it something like Puerto Rico, maybe, where it's some sort of addition, some sort of municipality. But To be honest with you, I can't see any of that actually coming to fruition. And then the last one, this one dropped about 27 minutes ago. Trump vows to rename the Gulf of Mexico as the Gulf of America. I don't know if any of this stuff's coming. I think it's a lot of political grandstanding. If you ever read one of Trump's books, The Art of the Deal, then you'll know that it's to make lofty promises, and then if you deliver on just a part of what you pledged, then you'll come off as being positively perceived by your supporters. I don't think any of this is coming to fruition, but I will tell you, right now, U.S. stocks sort of down, the tech sector's down, but mostly just flat. The show has begun. There's no question about it. The show has begun in Trump world. There's no question about it. So, all right, let's take one more market here. Great Britain pound USD. Let's go ahead and go to a 4-hour chart. With me, it's relatively straightforward. The way that we look to trade, to me, I just want to get with the pressure. So right now, where's the pressure at? You've seen a big 8-hour sell-off, but I still, on a 4-hour chart, you can see sort of the background there is going to be my Bollinger Bands. Let's go ahead and just change the settings one more time here. Okay, non-committal comes to mind. I think that I would be waiting for those macro levels we covered yesterday, the Great Britain pound USD. If you wanted to trade it right now, I think it's problematic. I mean, you'd have to sell with the last 8 hours of price action, something like this. Spike high to a spike low, perhaps a pullback maybe to 15. 25.15 would be your sell, and that sort of gets you with the prevailing price action of the last 8 hours. But I would say that looking at a chart like this, where it's located, I mean, I like the volatility. It's certainly opened up compared to where we were over the holidays. But what do we really expect to happen here? I don't expect much to happen here at all, really, until we get a firm look at our NFP figures. I would be looking probably at my dailies. If you like smart money stuff, I can identify your order block for you right there. You'd be looking sort of in this area as being a potential bid. If you wanted to get more aggressive with that, you certainly could. But what I would recommend is potentially using another indicator. I would look at Fibonacci's, and I'd say, okay, what's going on here? Well, we've got a slow market. We had a pretty good move. Now we're down a retracement. You can see we're at 38%. Do you want to buy this thing or do you want to sell it? I think it's sort of trouble. To buy it right now just because the things are so slow. But if you wanted to buy it, I would understand. For me, this would be a real tough trade to take right now. I want the thing to move. I want price to get into an area of disequilibrium and give me a chance to really knock its teeth in. And right down there, you've got your order block. You've got 78%. You've got a key number at 124. I would be looking at 124.09s as opposed to buying right now. Not to say that anything's wrong with buying right now. Could be pretty good. But if you do buy right now, stop yourself out. Don't let this thing go against you. Stop yourself out at 71, 124.71. Because at that point, just regroup. Just sort of regroup and say, okay, I might get a much better entry in the coming 48 hours. Something to think about there. All right, everybody, I'm going to go ahead and sign off here for a few hours. We'll be back tomorrow with more. Big news cycles, though, and this week's all about NFP, so be sure to tune in Friday about 8:20 a.m. Eastern Time, 6:20 if you're in the Mountain Time Zone, and we'll go ahead and get online, and we'll see if we can do some analytics. We're going to do some trading, some analytics. I'm probably going to break down the revisions to the previous numbers. I think revisions, it's all about revisions in this world. December's number was very high for NFP, and I would bet a lot that you're going to see that figure revised down. All right, everybody. That's a wrap for now. Have a fantastic session. Trade the action well, and we'll talk soon. See ya.